you can't ever do just one thing in economics. You probably can't in physics either. There's a butterfly effect. But in economics, you always have to say, and then what? And if you give a large break to one group, it's not free. If I were going to cut the revenues of the United States, I would have helped a different group of people. But as I say, it is very helpful to Berkshire. It's not that we were non-competitive before, but I will answer your question about it. But there's two kinds of items that people buy and think they're investing. One really is investing and the other isn't. If you buy something, a farm, an apartment house, or an interest in a business, and look to the asset itself to determine whether you've done something, what the farm produces, what the business earns, and so on, you don't really care whether the stock market's open. You can do that on a private basis. In fact, you do it on a private basis if you buy a farm or apartment house generally. And it's a perfectly satisfactory investment. You look at the investment itself to deliver the return to you. Now, if you buy something like Bitcoin or some cryptocurrency, you don't have anything that's producing anything. You're just hoping the next guy pays more. And you only feel you'll find the next guy to pay more if he thinks he's going to find somebody that's going to pay more. Now, if you ban trading in farms, you could still buy farms and have a perfectly decent investment. If you ban trading in apartment houses or even in equities, if you ban trading in Berkshire Hathaway for the next 5 years, our investors would do fine, over time. But if you ban trading in tulip bulbs, or if you ban trading in some Bitcoin, which nobody knows exactly what it is, people would say, well, why in the world would I buy it? Yeah. And you aren't investing when you do that. You're speculating. There's nothing wrong with it. If you want to gamble, somebody else will come along and pay you more money tomorrow. That's one kind of gain. That is not investing. Well, they try to, they just don't realize that all you have to do is just buy a cross-section of America and then never listen to people like me or read the papers or do anything subsequently. They think that because you can trade, you should trade. You buy a farm, you buy an apartment house, you can't resell it tomorrow, and the cost of moving around. Now you get something handed to you, liquidity, which is instant. You can sell, and the cost of doing it are pennies, compared to other kinds of investment activity. So because they can so easily move around, they do move around, and moving around is not smarter than investing.
You have a pretty cool morning routine regarding what you have for breakfast and how prosperous you feel. What is that? Well,
I now actually send somebody over to McDonald's, usually to get me something. Since the publicity I got from earlier describing my habits at McDonald's, I now have somebody go in the office, but that was more for entertainment value. I eat exactly what I like to eat. If I liked it on my 6th birthday, at my 6th birthday party when we had hot dogs and hamburgers and Coke and ice cream with chocolate, I still like it. And I don't care about anything subsequently. I discovered it all by the time I was 6. If somebody offered me a deal when I was 20 and said, you're going to live 1 year longer, instead of living to 88, you'll live to 89 or whatever it may be, if you eat nothing but broccoli and Brussels sprouts and onions and all these things, I just said, I'll take the last year off. It probably won't be that good anyway. So I eat what I like to eat. I'm not venturesome in that area.
I like how you lumped in onions with broccoli and Brussels sprouts. Never heard that.
I just don't happen to like onions, but no, I don't put them in the same category.
Okay. You and George H.
So in other words, the stock's down, maybe it should be down, or a stock's down, maybe it shouldn't be down.
Well, you just keep looking at the facts. I mean, you're looking at a business. That's the important thing. You don't look at a stock chart. I looked at stock charts for years. I used to have a lot of fun doing that. I was kind of groping around for a philosophy. You look at the business. I mean, how you decide if you own a half interest with some buddy of yours in a McDonald's store, how do you decide, whether it's a successful investment? Well, if the snow's 2 feet out and there's no business today, do you say, well, I made a terrible deal? No, you look at how it's performing as a business over time, how it's doing versus the competition. I look at a lot of figures just in connection with our businesses. I like to get numbers. So I'm getting reports in weekly in some businesses. But that doesn't tell me what the economy is going to do 6 months from now or 3 months from now. It tells me what's going on now with our businesses. And it really doesn't make any difference in what I do today in terms of buying stocks or buying businesses, what those numbers tell me. They're interesting, but they're not guides to me. If we buy a business, we're going to hold it forever. So we're going to have good years, bad years, in between years, maybe a disastrous year some year. We care a lot about the price. We do not care about the next 12 months. If you were to buy an auto dealership and you're, wherever you live locally, or a McDonald's franchise or anything like that, you wouldn't try and time the purchase. You'd try and make the right purchase at the right price, and you want to be sure you got a good business. But you wouldn't say, I'm going to buy it because growth this year is going to be 3% instead of 2.8% or something of the sort.
Fair enough. Are you surprised at how long this economy has been expanding?
I've been surprised by all kinds of things in the last 10 years about the economy. I mean, I don't think there was any economist I've ever read that talked about negative interest rates for long periods of time. I mean, if you go back and read Keynes, or you read Samuelson, you read any of them, they do not get into a negative rate environment. I think now there's still 11 trillion that's of government debt around the world that's at a negative rate. So we've never seen it before, and we've never seen, at least the conventional wisdom on a sustained period of long and growing deficits while the economy is getting better, extremely low interest rates, and really very little inflation. So something different is happening, but something different happens all the time. So, and that's one reason economic predictions just don't enter into
over $100 billion of cash.
Berkshire does.
Berkshire. No, well, I'm going to see how much you got. Maybe you do. Berkshire has over $100 billion in cash, and you say that you always want this company to be a fortress. So how much cash should an ordinary investor have on a percentage basis, do you think?
It depends on their personal situation. If you're working in something where you're living off your paycheck from week to week, you want to have a little cash around, and you certainly don't want to have a credit card that's maxed out or anything like that. But if your house is paid off, if you don't have big living expenses, you got a portfolio of decent, diversified businesses, you don't really need any cash.
So you can be more cash-free than Berkshire is?
Yeah, I've got responsibility. We've got insurance claims. We could have hurricanes that, would happen. All kinds of things where we might have to pay out billions of dollars. And I've got over 1 million people that own shares that are counting on me to run the place so we get through periods like that. But if I were retired, I had say $1 million portfolio of stocks that was paying me $30,000 a year in dividends or something of the sort, and my children had grown, the house was paid off and everything. I wouldn't worry too much about having a lot of cash.
Let me switch gears then and ask you about leverage a little bit. And corporate debt, people are concerned about. Federal debt at $22 trillion. Should we reduce, let's just say, the federal debt, and how would we do that?
Well, if you're running a deficit getting close to 5% when things are really good, that's a new world. And neither the Republicans or Democrats are particularly concerned about it. And we're not having a lot of inflation. That wasn't supposed to happen, but it's happening. That's why I say you don't want to get hung up on trying to make economic analysis, because nobody's any good at it. You don't get rich doing that. If you look at, you mentioned that Forbes list, if you get on the list, the number of people have done that by economic analysis.
Income inequality, wealth inequality, you've talked about the earned income tax credit. Is there more to it than that? Should we adjust tax policy? It seems to be going the other way right now.
Well, it is going the other way, but I think the earned income tax credit is the best way to put money in the pockets of people that don't fit well into the market system, but that are perfectly decent citizens and that have made a good bit of the success somebody like I've had with Berkshire or something possible. It wouldn't have happened without the America we have. And if you go back 200 years, and we're all working on, 80% of us are working on farms. The person that's the best at that working on that farm, whatever it may be, is worth maybe twice the ones that's the worst. I mean, that's the difference between super talent and no talent in the farm economy, picking cotton or whatever it may be. Now, if you're the best middleweight fighter in the world, you may get $20 or $30 million. And if you are just a good citizen, raise nice kids, help in the neighborhood and everything else, but you don't have market-related skills, you'd be good on that farm still. And you would be earning something comparable to most of the people around you. But you don't have something now that as it gets more and more specialized, and it's going to continue to get more specialized. You want two things for that person. You want them to have a decent life. I mean, they live in a country with 60,000 of GDP per person. You want them to have a decent life, and they can. I also think you want them to have a feeling of accomplishment. So you want them to have a job, assuming that they're not handicapped in some way. You want them to have a job. But the minimum wage would be one way to say, well, we'll make sure that they have enough money in their pocket. But that's got a lot of effects in disturbing the market system. They just need more cash. They don't need a higher wage, they need more cash in their pocket. And the government, at a relatively low cost, can provide a decent living for anybody that's working 40 hours a week and has a couple of children. And we've gone in that direction, and it's sort of bipartisan. I mean, you find both Republicans and Democrats for it. I think it would be better not to have one annual payment, that they get it monthly. And I think there's various things you could do, but you want them to feel part of the system, and you want to have them get, as more and more of these golden eggs are laid, you want them to find a leader for the group, for example. Everybody says, the system, it turns out very good medicine, but you can't go from 5% of GDP to 18, without really making you less competitive, among other things in the world. So everybody thought the system needed some adjustment, just not their part of the system, and that's very human. I'd do the same thing, I'm sure, if I was in the same place. So there's an enormous resistance to change, while a similar acknowledgement that change will be needed. And of course, if the private sector doesn't supply that over a period of time, people will say then, we give up, we got to turn this over to government, which will probably be
How would you define true success?
Well, I've said many times that if you get to be 65 or 70 and later, and the people that you want to have love you actually do love you, you're a success. I've never seen anybody that reaches that age. I mean, I'm not talking about somebody that's in extreme poverty or pain or something, but I've never seen anybody that, if they have a lot of people that love them, that is other than happy. And I've seen some very, very wealthy people that they give testimonial dinners to and name schools after and everything. Nobody loves them, Their own kids would say, he's in the attic.
What are, say, three pieces of advice you would give to people who are looking to succeed in business?
Well, by far the best investment you can make is in yourself. I mean, for example, communication skills. I tell the students that come that they're going to graduate schools and business, and they're learning all these complicated formulas and all that. If they just learn to communicate better, and both in writing and in person, they increase their value at least 50%. I mean, if you can't communicate, somebody says, it's like winking at a girl in the dark. Nothing happens, basically. And you have to be able to get forth your ideas, and that's relatively easy. I did it myself with the Dale Carnegie course. Some people wish I'd taken a shorter course now in terms of my talking later on, but it's just hugely important. And if you invest in yourself, nobody can take it away from you. I mean, the second thing, which I'll get a certain criticism for not living it, but I do tell students, that if I gave you a car and it'd be the only car you get in the rest of your life, you take care of it like you can't believe. Any scratch, you'd fix that moment. You read the owner's manual. You keep a garage and do all these things, and you get exactly one mind and one body in this world. And you can't start taking care of it when you're 50. By that time, you'll have rusted out if you haven't done anything. So you should really make sure that you just remember that you just got one mind and body to
about
get through
life
life with
advice?
and to do the most of it. Well, life advice is, the most important thing, aside from the things I've talked about already, is really who you associate with. You want to associate with people that are better than you are. I mean, basically, you'll go in the direction of the people that you associate with, and you want to have the right heroes. You want people, if you want to emulate somebody, you better pick very carefully who you want to emulate. And when, obviously, you can't pick your parents. They're going to have an enormous influence on you, but you don't get a choice on that. But you get choices as you go down the line, and who you admire, who you want to copy, and the most important for most people in terms of that decision is their spouse. It's also important in terms of a partner in business, but the partner in life is the most important one. You want to pick a spouse that's better than you are, and then he or she, and you hope they don't figure it out too fast. Depends on the person, much more than it depends on the school. I mean, I wouldn't worry. Some people are going to get a lot out of advanced education, and some people are going to get very little. And I don't even think it's important that every person go to college at all. I mean, we have all kinds of jobs at 70 or so thousand a year, or 80,000 a year that college training is not of use. And I actually was not keen on going to college myself. Yeah, my dad kind of jollied me into it. He could get me to do anything, but if they'd had an SAT test in those days, he would have taken the test for me. but because I knew I could have a good time, and I liked investing, and I didn't really feel I could read the books. So I don't, it's a big commitment to take 4 years, and the cost involved, and maybe the loans involved, and everything. And I think, depending on what your interests are in life, I don't think it's for everybody. I think it's for a lot of people, but there ought to be a reason you're going, and I didn't really see much reason.
All right, Warren Buffett, thank you very much for all of your time. Great talking to you.
Okay, thanks for having me.